Welcome. Welcome to my middle of my coughing fit. Happy Thursday, everybody. Or as a friend of mine would say, happy Friday Eve. Let's just check out the after hours activity in the markets. We're long of Tesla, which I have on top here. I'll talk about Tesla, Microsoft in a minute. There are a couple of trades that we have on to the long side. I'll talk to you about my concerns about today's close. It wasn't great, but nor was the volume to the downside. So we are at a pivot point. There's no doubt about it. We are at a pivot point. The first couple of days of the year are usually a little bit touchy-feely, see which way the markets are going to go. I mean, last year we just went straight down. This year, a little bit different. So I'm not ruling out the potential of a rally. Am I less optimistic than I was yesterday? Yes. Yes, we'll talk about that. So let's do a quick swing through here. Check out Microsoft after hours. They're trying to drift. Well, it's about flat. Not much happening here at all. Apple. Meh. Not much at all. For whatever reason, BlackRock really faded away today. Not much happening here. Now, I put a poll in there about who our next House Speaker is going to be. So make sure you take that poll. It's probably the most important poll you'll ever take, and I'm sure that the powers that be in the swamp are tracking it very closely, and will take our suggestions under advisement. And I do not feel like I am. As a matter of fact, I'm going to vote. I am not ready for suicide. So if I show up dead, I didn't do me. Where is my poll? All right, 80% Trump so far. Why can't I take my own poll? I guess I got to go. Oh, I know what I need to do. I deserve a voice. My wife wouldn't agree with that. Here we go. Look at me. I'm on the front page. Look at that. I'm a suggested video. Okay, this is not going to work. Suggested video. Yay. All right, let's see. All right. Where's my poll? I'm waiting for people to join it. Oh, Klaus Schwab. All right. He got it. All right, here we go. All right, so we got Trader Isaac on. Hello, Bob. Patriotic Peaceful, January 6, 2023. Donald J. Trump for Speaker. Yes, sir. Talon. Hey, brother. Jeff, we got to get you fixed, right? I keep forgetting. We'll get it fixed tonight, I swear. Trader Isaac, are we at a point where the dips in gold stocks can be bought? We'll talk about that. I think that's a very good question. I spent a lot of time last night on Market Wrap talking about gold, because the question arose yesterday: is it time to begin adding more? And I went over it in great detail last night on Market Wrap, so we could touch upon it again tonight. And I'll tell you the reasons why I said no last night. Tim, hello. Nice. Yeah, it's so rare I get suggested videos. Maybe I'll exceed 4,000 subscribers this year. Crazy. I got these guys that are like these kids that have come on, hot stock, penny stocks. They're on for 2 videos. They got 20,000 subscribers. RK, loss number 10. Loss number 10. That's above me. I'm not that bright. Pete. Hey, Bob. Pete, hello. RL, happy pre-weekend. Same to you. Oh, Jeff, man, that's not right. That's not right to do that to me when I'm live, man. Oh, that's so wrong on so many levels. Okay. I got to read it. Jeff, I'm already fixed, but that's personal. That's awesome. Bravo. Perfect, perfect, perfect. All right, where is the poll? All right, so I'm going to vote in private. But right now, Kevin McCarthy's got 0. Donald J. Trump far in the lead with Klaus Schwab, which I spelled wrong with the little semicolon. Klaus Schwab in second. Nobody likes Kevin McCarthy. All right. All right, so I guess I voted because it's not letting me do it again. Okay, that poll is still open. All right, let's get to it. So we'll go to the weekly charts in a moment, an abbreviated week, but not an uneventful week. I mean, we're being given signals by the market, and we need to pay attention to them because they're going to point us in the right direction of where this market's going to go. But before we go to the weekly charts, let's talk about economic came out this week, and we're going to talk Federal Reserve's balance sheet and why it could be a problem. So some construction that came out. I don't know why this is all wonky here. On par with expectations. Job openings higher than expectations. Quits, I don't know what the expectation was, but the quits were higher than last month. That's not good, but this may not be seasonally adjusted. Let's check this out. Yeah, job openings stay high. Yeah, so that's not good. We need to go back because people that are new to technical analysis, new to the stock market, they hear me say, "What job openings still very, very, very high." Well, isn't that good for the employee to get a better job? Yeah, I agree, 1,000%. Maybe he gets paid more money. Agreed, love it. That's logical thinking. That's not Wall Street thinking. That is Americana. It's apple pie. It's ice cream. But Wall Street wants the employee to make less. They want the Federal Reserve raise rates, and they don't care if they have to take their own mothers out to the backyard and pop her a couple of times in the head and put her down. That's all they care about is the buck. So bad news is good news for the market. And today we had good news, very, very good news from the ADP employment report. We're going to go over that in a moment. FOMC minutes were consistent with what was spoken about last press conference, so no great shock there. In fact, we got a bump out of the market. Now, tomorrow, we're going to get non-farm payrolls. I was going to talk about Bullard, his announcement. That gave a pop to the market, but he's a non-voting member. Who cares? So tomorrow, we get non-farm payrolls. And I'm telling you right now, I have a good pulse of the market, and everything's hinging on tomorrow. It probably wouldn't have been as important tomorrow had ADP employment report not been so strong. If the government numbers, the establishment number comes out very strong tomorrow, which it has been. Remember, there's a massive skew between the establishment number and the household number. Somebody's playing games. And I think it was the BLS, Bureau of Labor and Statistics, came out. Oh, no, they didn't admit to it. It was one of the Federal Reserve banks that did a fact check on their work and said, no, you're missing like 1 million jobs here. The data's wrong. So do they revise their data tomorrow? Hopefully they do. Hopefully they do, and they miss on non-farm payrolls, because if there's a big beat consistent with or near to the ADP employment report, there's a very good chance that the stock market breaks. Why? It's because the Federal Reserve, they need to destroy demand. they can only raise rates so much, or else the amount of our debt, the debt service, not the principal payment, but the amount of our debt is equivalent to our budget defense spending. That can't happen, but we're nearing it. We're very, very close. So they need to destroy inflation quickly, and they want to get as many rate hikes in their back pocket as possible, because eventually at some point in time during this year, there's going to be an event. And what's that event going to be? It's going to be the correction, we'll talk about this in a moment. It's going to be the resolution of the yield curve. I'll talk to you in a moment about how the yield curve is looking in a few minutes. So bad news is good news, good news is bad news. If we miss on non-payrolls tomorrow, you may be saying if you're new to the stock market, stocks will drop. No. If we miss on non-farm payrolls tomorrow, stocks go up. Now, what was inside the ADP report? This is what I read, and this is why I was willing to buy stocks on the dip this morning. And I was hoping that the street would see through this and look at the underlying numbers, but they did not. One thing that they may have done is held on to one metric here, we'll talk about it in a moment, that was concerning, looking at the report through their numbers. But before we get to it, ADP reported an 182,000 job increase in November. Bravo. Good stuff. Great to hear. The Wall Street Journal had forecast a gain of 153,000 private sector jobs. So huge beat. Here's the problem. I have it highlighted in red. A Wall Street problem, not a Main Street problem. Annual pay was trending up 7.3% a year ago for job stayers. So you didn't leave your job, you got paid and have a 7.3%. Normally, when you leave a job and go to another one, well, you're going to get paid more. That's why you're leaving your old job, unless you just hated your boss. But that was the smallest increase since the data began being collected 3 years ago. Interesting data point. So I think that this is what, even though it was smaller than the prior 3 years, it's a pretty big increase. Here's the key takeaway here, and this is what I was hoping the street would latch on to, but they didn't. Most of new hiring took place. Now remember, the 7.3% increase for job stayers, not new hires. Okay? That's the variance there. That's the deviation. So for those that were new hires, they got jobs in service-orientated businesses such as hotels and restaurants. Low-paying jobs, very low-paying jobs. So creation in jobs, yes. Low-paying, yes. I think that this data was a bit skewed, to be honest with you, and looked a little bit too negatively by the street. Now, transportation, I'm not going to overlook this. Transportation, I would think that transportation is a fairly decent paying role if you're a truck driver, an engineer. What makes up this transportation data point or jobs bucket? I don't know. So I can't speak to it. I would imagine it's a reasonably good paying job. You know, it could be an airline pilot. Maybe they brought back the airline pilots that didn't want to get back. I don't know. So Americans have shifted more spending towards services and away from goods. And here's where the street kind of missed it. Away from goods. Employment amongst goods fell in December. Think about it now. Your higher paying manufacturing jobs did not benefit by this report. They actually fell. So while the headline here, and this is what the algorithms pick up on, and you would think that, I was asked today, are you a day trader? I said, no, I'm not a day trader, because I saw the report. I dropped down an order saying, you know what? Let's see if the street picks up on this. Let's see if the algos get it wrong, and maybe they'll bring the market back up higher. They tried to, but it just became a one-sided market today, and really was not a good trading day. So big picture, the economy has slowed and businesses aren't hiring quite as many workers as they were last year, but the U.S. labor market is still extremely robust. That's the last thing the Federal Reserve wants to see. They want recession. They want recession. They want layoffs. And you may be saying, why? Demand destruction. They can't raise interest rates high enough to kill inflation. Therefore, they need to do chemotherapy on the economy and kill demand. Remember, Paul Volcker brought the Fed funds rate up to above the rate of inflation back in 1981. That killed inflation. They can't do that now. The rate of inflation is over using current CPI is above 9%, 8%. They can't bring the Fed funds rate above 8%. We'd be in an avalanche of selling. It would be a depression. It would be depression. So they can't do that. They need to kill the economy. They need to kill demand, and that's what they're hanging their hat on. And the longer that we see positive headlines, the longer they need to kill the economy. Now, the correlation I'm going to draw for you is this, is that eventually they're going to get what they want. And probably sooner rather than later, because remember, the household survey is in decline, meaning the household non-farm jobs survey has been in decline since June, losing jobs, whereas the establishment survey, oddly enough, going into the election, was rising dramatically with a spread of 2.5 million jobs difference. Where are all those jobs? The jobs were taken up by, they counted people having 2 full-time jobs. That's a healthy economy. Not one guy bringing home enough salary to take care of his family. No, you got a guy out there. Everybody else doesn't want to work. They're on the government dole. So you got a guy out there, good work ethic. He's taking on 2 full-time jobs to support his family. They're counting that as a job creation when the guy's just trying to keep his head above water. And Lord knows where else the other 1.5 million jobs came from that the Federal Reserve Bank could not find. They can only call into question the 1 million jobs numbers. So a lot of effery going on. That seems to be my word of the day. You can fill in the blanks. It's a family-friendly show, but a lot of effery going on here. So maybe they'll revise the numbers down tomorrow, since it's after the election now, and they can come clean with the American people. Not that they'll ever be held accountable for their shenanigans. And lastly, this is why the market was weak today. The central bank worries the labor shortage is driving up wages, and it will make it harder to bring down high inflation. Again, exactly what I just said. They're trying to kill the economy. And that's it. All right. So Bullish came out today. He's a non-voting member. He blew smoke up each ass. Pardon the pun. Show. There's really nothing to talk about here. So not all is what it seems. U.S. services contracts yet again. That's the Purchasing Managers Index. Now, any read below 50 is a sign of economic contraction. Our read was expected to be 44.4%, and it improved somewhat to 44.7, but still in contraction. It's either you're above 50 or below 50, because either you're growing or you're not growing. It's really zero sum. So it's less worse than what they expected, but still, you want to see expansion of the economy, except for the Federal Reserve. Let's go to some comments here. Oh, I see. Trader Isaac, number 10 from gotcha. Yeah. Okay. I had heard 9. Now they're up to 10. Huh? Are they still going right now? Bob, it might be the mic, but you seem to be cracking, skipping on your mic. Okay. Could somebody give me a sound check? Is this okay? Is that Is that with everybody hearing the same thing? I'll check it on my end. Bear with me one moment while I check. It's really quick. Audio. My microphone is accurate. Output and input is accurate. Let me know how that sound is, because it looks accurate on my end. My gain is okay. Maybe I just need to, it is breaking up. Yeah, so that's 2. Let me do this. I'm going to refresh my screen, my software. Okay. I'm going to reload. Let's see if this works. Sound check. Hopefully that's better. I lost all the comments. I saw somebody said, I think somebody just said, I hear you in California. So, but I lost that. Rick Thomas, I heard it as well. Seems to come and go. Okay, let me know if this is better. Hopefully it is. Okay, so one of the reasons today. Okay, good. Thank you, Rick. Pete, thank you. Yeah, this software that I use, I actually canceled the subscription. I'm not renewing, but unfortunately, it doesn't stop until September, October of next year. So I have to use it. I'm not happy with it. U.S. trade deficit unexpectedly plunges in the biggest drop since the global financial crisis. Normally, that would be good. The problem with this report is that usually it's a precursor to recession. We already know we're in recession, but you get a big drop like this. It's since the global financial crisis. So we're going to talk more about the yield curve. That's our barometer for equities. And when we think that this whole thing goes poof, and right now I'm not seeing it right now. It may happen, but I'm just not seeing it just yet. Not the big blow off. Could be a breakdown below the October lows, and we'll talk about that in a moment. But I'm not seeing the setup yet for a big. All right, so just keep an eye on this. We're seeing the signals for a major slowdown in the economy. Hopefully, the Federal Reserve is watching, but you could tell that they're really ramping up going into 2023. The rolling off of debt off their balance sheet, because this is as of, I believe, this week. Let me fact check. Yes, this is as of yesterday. We dropped from $8.551 trillion to, we dropped about $50 billion. That's a lot of money. That's a lot of money. And this is like a rate hike on the taxpayer. So it's good that they're doing this. Don't get me wrong. But the problem is, and this is thinking of this from a stock market mentality, that the street doesn't like this because it makes borrowing costs higher. So as they continue to do this, expect more and more pressure on the markets, because remember what brought us to the bull market party. It was the inflation or the inflating of this bubble. What's going to take this party home in a stretcher? It's going to be the deflation of this bubble. So this is a pretty steep curve. So buckle up here. That's not a good thing to be seeing as a long trader. If you're short, you'd probably be sleeping a little bit better tonight going into tomorrow. All right, so this is an article on Zero Hedge, make or break coming up. I agree with this. All right, so NASDAQ closing in on make or break again. NASDAQ is trading very close to the huge 10,800 area. This is a must-hold level. First resistance level at the 11,600 level. So we could have a hell of a rally here, but we need to hold 10,800 first. Getting closer. VIX is far from dirt cheap. True. We are getting very close to when seasonality has kicked in over the past 20 years. Yes, first 2 weeks of January are generally bullish weeks. After that, quite bearish. SPX in recessions and recessions. Pick your scenario. We are currently following the 1969 setup rather well. 1969 is here. I just saw this. All right. Yeah, I don't know if I agree with this. Maybe it's right. Give me more time to think about it. Okay, they did an overlay. Good. All right, so this is a log graph of 1969 recession. This is the stock market with bright green overlaid our current market condition, are the price levels on the S&P 500, I believe, and in blue the 1969 S&P 500. And we've kind of known this. We've been tracking fairly close. There are different variations of this, but this being a guide, it would imply that we're probably going to move up higher first prior to the major rollover, but not before we get an undercut double bottom if 1969 is to be the guide. So I've seen better overlays, and I think 2007, 2008, maybe a little bit more better correlation. Margins are at all-time highs. This is the stocks, European. I don't care about them. King dollar is back. It rallied today. I don't know whether or not it's back per se. So far, a perfect bounce on the dollar longer-term trend line on a weekly chart. Note that we are pushing above the 50-week as of writing. A lot of new, maybe. We're going to be taking a look at the dollar in a weekly chart in a moment. But yes, it did gap up higher today. And why this matters is that remember that it's not just gold and the miners and silver that gets adversely impacted by a rising U.S. dollar. It's emerging markets. It's high tech, because even Microsoft has come out and said during the past couple of earnings reports, the dollar's killing us overseas. So the currency conversion. So if the dollar does break out here, then we may have a problem for equities overall, because it does eat into their earnings. All right, so we're pretty good here. I don't need to go through all these. Gold is getting ahead of itself. No, I don't like that. Gold hit resistance. It broke out yesterday. It broke down today. 1850 closed above yesterday. We spoke about this last night. I'll probably repeat it later on for those that join in late. I mentioned last night, because it was asked me yesterday, do we go buying gold now? No. Why? Weekly chart, resistance above. Yes, we closed above the 1850 mark, which is very, very critical, a very critical breakout point, because it closed above it yesterday. But I said adopt the 3-day rule. What's the 3-day rule? Can we spend 3 consecutive closes above 1850? We spent 1. Then we broke down. Right? So just because we break out, it's critical to wait for the retest. This is why I always say you can nibble on the breakout, buy aggressively on the retest with its tight stop right below support. Simple as that. Rinse, wash, repeat. Get wealthy. I don't believe that this is accurate to be displaying gold relative to yields. In the 1970s, 1980s, both gold and the 10-year yield went up together. Fact check me, check it out. What did not go up with gold and did not go up with yields was the U.S. dollar. It went like this because Nixon took us off the gold standard. So the dollar was devalued, as it's being devalued now again last week with another $1.7 trillion worth of discretionary spending, and they should have the dollar overlaid versus gold. They're buying into the argument that it's all about yields versus gold. Wrong thinking. And in fact, do I have that chart saved? Boom. Let's turn this into a quarterly chart. Okay. So here you have in gold. Excuse me. Here you have in candlestick gold. Here you have in gray is the 10-year yield. Here you have in green is the US dollar. And you can see that back in 1971 up and into 1981 or 1980 when gold peaked. And then you had your double top in mid 1980. The yield, the 10-year yield moved up higher with gold. But what did not move up higher with gold was the US dollar, which moved lower. So let's not get lured into false arguments. I totally disagree with this, that the argument here is that gold cannot rally with the 10-year yield. It most certainly can. Because that means that if the yields are rising along with gold, it means that the Federal Reserve is behind the curve and they need to catch up. But if you have a Federal Reserve that's threatening to pivot, well, then yields aren't going to move up as much unless the bond vigilantes come out and force yields up higher. It's still not going to stop gold because the dollar is going to weaken because the Federal Reserve doesn't want to tighten policy. So there you have the correlation of the 10-year yield and of gold. Worry about the dollar versus gold. I'm trying to see if there's anything else more interesting here to talk about. Nah. Well, maybe there is a contrarian view. Maybe there is. So this is retail selling. This is retail selling of ETFs. So this is a ratio chart. All right, there's nothing really to talk about here. It really doesn't matter much. Okay, let's talk about the Qs for a moment. So we did some buying yesterday, and I even did some buying today. But other shares that we put on today, I stopped out. We bought Microsoft yesterday on that pullback. It rallied off the lows, so we closed out the session yesterday fairly well. But Microsoft did not behave well today, and it closed just off session lows. The intraday chart looks okay. You may get a pop tomorrow, but it didn't look good. It didn't look good. So I said, you know what? We have the jobs report coming out tomorrow. If they sell it off, maybe there's going to be an opportunity to buy an oversold dip. If they rally it, okay, we'll see how it closes out the session. If it closes out near session highs, the best it's going to be is an inside day tomorrow on Microsoft. So it looks good. You know, maybe we'll nibble on and build back our position yet again, or sell naked puts, and we just reduce our basis costs. So there was no reason to go in heavy tomorrow on a report that could move the market significantly lower. So in short, we wanted to manage our risk. Trader Isaac. Matt Gaetz just gave a speech and nominated Donald J. Trump 11th go around. Awesome. Awesome. And here we go. Here we go. I'm going to play it. I think this is the first one.
Gates.
Donald John
Trump.
The deep state is going to have a hit out on him. They are going to go after him with guns a-blazing. But God bless his soul. We'll come back to this. Because the crooks that are out there, Dan Crenshaw, Sean Hannity, just showing their colors like you could not imagine. So the media all buying into it, button paid for, Fox Business News, great shot. Kitzinger, that piece of human waste payoff today. He's now a member of CNN, or yesterday, whenever they threw his ass on there. But let's first talk about the Qs. What happened today? So I know this is a chart, but last night on Market Wrap, I was talking about this setup. I said, you know what? It's not a pretty setup, but you can't imagine the Qs pushing up higher here, which they attempted to do on Tuesday, because volume on this pullback on Tuesday was relatively light. It was a down volume session, but the problem is that yesterday's up volume was fairly light. So I thought, you know what, maybe what they could do is if they drive it through and close it above 270, the Qs on rising up volume, that could be the Q. That could be what gets us to put a spark to the fuse and gets a rally going here. But I warned that this is a two-sided blade. If we fail to hold this lower band of the bear flag setup, we could break to new lower lows. Now, to be fair, there's another way of looking at this, right? This is the bear look. Technical analysis is not about perfection or crystal balls. It's a matter of probabilities. So I throw up the bear case because we are in a downtrend, right? So the probability that I'm looking for is that we're probably going to break to new lower lows. That's the greater probability. The audio clipping happens every time you say Trump. Oh, now it makes sense. Oh, yeah, huh? I shouldn't have put in the tagline on YouTube that the word Trump. So being sabotaged. So deep state's coming after me. All right. Thanks for the heads up, Talon. I got to go check for a bomb under my car. All right. So the other way to look at this is this way. We get rid of this. We go like this. My mouse is being wonky right now. Deep state's after me. Trying to sabotage this broadcast. America's Freedom Channel, the Contrarian Trader. Now, what we could be setting up for is this. We still have a higher low. We have not broken down. We are at a critical juncture, no doubt about it. But there's a possibility that we hold the day's lows. What worries me? We close near the lows of the day on the Qs. So that's no bueno. Down volume, it was very light. So we'll see. So for good luck, since we have a long trade on and I want the markets to rally, we'll keep it the bull case. Look at RSI, it broke down. God damn it. Evening 24 watching, but only 14 likes. Good point. Can you folks please do me a favor? May I ask you to smash the like button, subscribe to the channel. It really helps me out. Thank you very much. Thanks for the heads up, Franklin. FBI listening in is degrading the quality. Yes, they know. Isn't it odd how they know every single terrorist, bomber, stabbing? They know them all. They just don't do anything about it. They're worried about parent-teacher organization meetings. I don't want to get into it. I know everybody on here is not about politics, but so I don't want to bore people or piss them off. All right, let's talk about the yield curve and why I kind of remain bullish on equities. So last month, we had our first steepening of the yield curve. Now, granted, we're only a couple of days into the month, but what are we doing so far this month? Well, no new monthly high. That's a good thing. if we see a new monthly high, I'd be a lot more worried about equities than I'm seeing right now. So the thing to keep in mind is that we've had a declining and inverted yield curve with stocks in a downtrend for about a year now. So it really hasn't made all that much of a difference. Whereas in times past, the inversion of the yield curve didn't really have an adverse impact on equities. This time around, it's different. And I'm not saying it's different this time, it's fact. The yield curve inverted, stocks decline. That's in the book. We're not making that up. That's not speculation. We're not rationalizing. So it is possible because the trends are both the same. They're both heading down. Can equities break to new lower lows? Of course they can. But when I'm going to worry about the big capitulation sell-off is when we get a steepening of the yield curve. That means the Federal Reserve is responding to something, or something is responding because the Federal Reserve has had to act and pivot. It's usually when the Federal Reserve pivots, that's when you get the steepening yield curve. And that's when bad things happen. So what's going on in the House of Representatives is if you can't look at this from a Democrat or Republican perspective. I am no Republican. I am certainly no Democrat. I'm a fiscal conservative, and I have a fairly I think I'm fairly middle ground when it comes down to social issues. I was brought up on welfare. Not many people know that. I was brought up on welfare. I brought not a debit card or an EBT card to school or to the store. I brought literally a book of food stamps. I had to rip them out and pay for my food that way, and it was humiliating. And that's why I couldn't wait to get off them, because there was a stigma attached to being on social welfare programs. Am I against social welfare programs? No, I'm all for them for a limited time. And they must be policed. So what we're looking at right now is really just, I thought that this recent election with the steal over in Maricopa County and in Arizona was out in the open and really just an eye opener. The fact that you had Lindsey Graham sabotage Republicans on the national level by saying that he wanted a national amendment to ban abortion so that the women did not come out and vote for Republican candidates. He did that. Look it up. Fact check me, please. Mitch McConnell, who refused to endorse MAGA candidates. Mitch McConnell, who just did everything in his power to hurt Republican candidates. You know, I couldn't believe my eyes of what I was seeing out of the Uniparty, the Republican Party. They're all one party. And then I was on Twitter and I saw this, and I went over to the World Economic Forum to make sure that this is not a meme or it's not mocked up. It's not. Kevin McCarthy is a member of the World Economic Forum, and they've already anointed him Congress from California, U.S. House Foreign Affairs Committee, majority leader of that House, U.S. House of Representatives. He moved into the office. He has not been nominated. This has been up for 2 or 3 days already. This is jaw-dropping. These are the people that pull the strings of these people that are in the media and that are in Congress. So you may think that it's Biden making a decision or it's Kevin McCarthy making a decision. They're just taking orders. They're just taking orders from the World Economic Forum, the Bill Gateses of the world. So I think that while this is going to be good for the country as a whole to have this type of a gridlock in Congress, the one thing that it's going to do, it may be bad for the stock market. And I'll tell you why. you have this guy here, Dan Crenshaw. I'm going to play this. And this guy here calls himself a conservative. He is no conservative. But here's a guy that for the past couple of days is just besides himself, that McCarthy does not get anointed. It's all about the anointing. He calls himself a conservative, but he's anything but. I'm going to play this. And just look at how he presents himself and how desperate he is.
Institution of rules.
Well, Byron Donalds is running. Byron Donalds is running, and you don't think he's a credible candidate.
He started 5 minutes ago, and no, he's not a credible candidate. He's a freshman who started 5 minutes ago. That's not running. He didn't raise hundreds of millions of dollars to win the Republican majority in multiple election cycles. No, that's not a credible candidate.
But is there? Are you or anyone? I know in your mind, Mike, you're still with President McCarthy. You're still very loyal in that regard. But eventually, the more this keeps happening, you begin to wonder what is an alternative here. I'm just wondering. We keep repeating this.
There is no alternative.
But it's not loyalty to the man. It's loyalty to the rule of law that we abide by here. If you always set this precedent where a mere 20 people can just destroy the conference of over 200, then you're setting a terrible precedent, and they'll just keep taking scalps. We've seen it over and over again.
But it is what it is, right? I mean, you're right. The 20 still exists, right?
Hold on. I would agree with you if Byron was getting more votes, but he's not getting more votes. And in fact, they've just switched their votes. Like in this one, they're voting for different people. These people are all over the place. They don't have a consensus candidate.
Okay, so here's what they don't want to tell you. Here's what they don't want to tell you. For the past 10 odd years, you cannot bring an amendment to the floor. Everything gets decided in committee. So basically, if you're not on a committee or you don't have a chairmanship, if you're a congressman, you just sit there and you had better vote or else you get punished. Vote the right way. What Crenshaw and what McCarthy and what all these hoodlums are worried about is the fact that not the fact that McCarthy's not going to win. In all probability, he's going to win. What they don't want is they don't want the ability of a individual congressman to be able to say, I want a vote of no confidence in Kevin McCarthy. He needs to be replaced because he's a Rhino Republican, and I want him out of that chair. They do not want to grant the power to those 20, and that is the reality of what's going on behind the scenes. Kevin McCarthy, in all probability, will be the next chair. I highly doubt it's not going to be him. Nobody else wants the job because they're afraid to take the job. The 20 that are holding out, they want a better deal. And it's in the charter. You need a plurality, a certain number of votes in Congress to become a House Speaker. If you don't have it, you don't have the votes. It's as simple as that. It makes it sound like these people are he called them terrorists. He called them terrorists. This is not a leader. This is a rhino. He should be developing and forming a consensus so that they could vote along together in the future and, have more leverage. Why doesn't he want more leverage for himself rather than going to work for McCarthy and doing what he says? Because he's getting paid off. That's exactly why. Just like Kitchenberger for selling his soul for the J6 committee, 2 days after leaving office, got a new job, probably making $1 million a year over at CNN, putting that smug puss on TV with no brain in his head whatsoever. So these people are absolutely corrupt to the core. Take a look at Sean Hannity's video last night with Lauren Boebert. It is disgusting what he did to her. I'm not a huge fan of Hannity. I don't think he's an intellect whatsoever. I've never spoken bad about him, but it was obvious from last night's video. It's way too long to play here, and it's much too cringe that I play it tonight. It's just bad. I'll leave it to you to go take a look at it. I'll send this out, but the level of the lack of leadership that we have in Congress is just horrible. And this smug prick, he doesn't deserve to be Speaker of the House. And I'll be honest with you, for those that are out there that say that I'm a Trump MAGA guy through and through, no, I think Trump is out of his goddamn mind for saying vote for McCarthy. McCarthy stabbed him in the back. Now, it could be that Trump is saying, I want to be pragmatic. This is probably going to be the Speaker of the House when I get back into office. I'm going to need him because I don't have Mitch. Fine. Tell him to negotiate with the other members in good faith. And then he becomes a speaker, not try to jam this jerk down everybody's throat. So, interesting stuff. History in the making here. Let's talk a little bit about the weekly charts and how they're setting up. What time do we have? We have a little bit of time to go over some charts. I just called Jeff Van Drew's office and told him he should vote for Trump if he supports America first. Good for you. The GOP doesn't have the balls to elect Trump on the second anniversary of J6. Oh, yeah. Right. Good point. Look what shows on Cavuto's Rhinos only show. Yeah, I happen to like Neil Cavuto, but sometimes he ticks me off. I mean, with the vaccine mandate thing, I stopped watching him, to be honest with you. Okay, yields down on the week. It's good to see. How do we do today? I believe we were down today as well. Actually, we closed up, but we closed well off the highs. This matters for equities, folks. Let's skip around here. The dollar. All right, so the dollar, yeah, it does have a weekly breakout. One trading day left to go, right? So we don't know whether or not it's going to close above this resistance level. Oh, look who made it just in the nick of time. See what happens here with Jody, and it's very sweet. Happy New Year, Jody. We love you to death. We love your presence. But normally what happens is Jody's very kind, gracious, and usually I'll get a nice note after the end of the live stream saying I missed it, but it's a very nice note, and she's just letting me know that she's out there watching. So great to have you here, Jody, as always. Sorry I'm late. It's great to have you. You can be as late as you want. Whenever you arrive, I bet you the sound just cleared up. We had sound audios earlier. FBI can't drown us out now that Jody's here. Okay, so weekly chart, the dollar, sure, this is definitely a problem. Well, not necessarily. We don't have a clear breakout yet. Let's just say we closed at resistance. But I think the chart to watch here is the daily chart of the dollar. And for those folks who's joining in, why is it important? You want a weak US dollar if you want to buy gold. You want a weak US dollar if you want to buy the gold miners. You want a weak US dollar if you want to buy Microsoft. A strong US dollar hurts the multinationals. It hurts emerging markets. It hurts gold. So the one I like better from my perspective, being long of Microsoft now as of yesterday, and being long heavily of the mining stocks and gold, I want to see a negative crossover of the 50-day cross down below the 200-day moving average. Now, they gapped it up today, and they closed it above the 200-day moving average for the first time since it's been a while. Wow. November the 30th. Volume was not that heavy. How did it close out the session? A good close. Not at the highs of the day, but a good close. We could see a continuation run up here tomorrow. No doubt about it. Volume into the close was strong. So that would imply we're going to get a higher high tomorrow. That's not good for the dollar. Now, if we get a weak jobs report tomorrow, then you may see a pullback in the US dollar. Jody, You're welcome, as always. Let's continue on here. Volatility index. What's that telling us? It's up on the week, but it's off the highs of the week. Now, for those just joining in, we're going over the weekly charts because it is Thursday, one trading day left to go. And this really gives us a feel of how we're going to close out the week and how potentially we want to be positioned going into the new trading week. Now, if we see a breakout tomorrow on the VIX, well, then we want to be positioned short of the market. If we see a breakdown on the VIX tomorrow with the strength in stocks, well, then perhaps we want to add to longs. So we're really at a very important intersection between where this market is headed in the near term. And I forget who said it earlier, in the next couple of weeks, it becomes very seasonally bearish for a few weeks. So let's pay heed. S&P 500 weekly chart. We are down on the week at current, a little over 0.75 of a percentage point. But volume is low. Yes, it's an abbreviated week, but so was last week, and we're below last week's. We may come in on par with last week's volume. And remember, the big boys are back at work now. So you would expect that volume would be a little bit heavy. I think that what they're waiting for is tomorrow's jobs data. The Qs we've spoken about. We're just going to go over the weekly chart here. We are back down below weekly resistance. We don't want to close there. If we close there, I'll probably take more longs off the table. Not that we have a lot of long positions. Right now, we're sitting with Tesla, Microsoft, and a lot of capital. That's pretty much it. Even our emerging markets, BRZU, we booked profits on earlier in the week because it really began to pull back. What's that doing on the week? Wow, thank God we got out. We'd be underwater right now. The bank stocks, they were strong. They still are strong. A little bit of resistance. We tapped that 35 mark or close to it. Technology, we know that's weak. Forget that. Semi stocks, doing better than overall tech. Telecom, one of the worst performers last year. We are holding, unlike the Qs, we're holding weekly support. Biotechs, consolidating, attempting to break out. Nothing to do here. We are long as well. Staples, a breakdown. Now, we've been talking about this quite a bit with members that it appears as though, at least prior to today, that what they were doing is they were coming for the generals. We were short of energy going into the new year. We booked that profit. We made that real. We got out yesterday at the lows. Today, energy moved up higher, right? But they came for the generals. No, that's not the right chart. This is the right chart. They came for the generals. We were down much lower on the week as of yesterday. Today, they popped up higher. We may look to reshort energy. And they also came for the generals in the consumer staples area. We are breaking down at current, down nearly a percentage point, down more than the S&P 500. Now, consumer discretionary stocks, this is mind-boggling to me. This is by far one of the worst performing sectors of 2022, considering the fact that we broke down below not just the October lows, but the June lows, yet we're only down fractionally on the week, where the staples are down nearly a percentage point, and energy, again, is down, wrong chart, down over 1.75%. So that's a big deviation. So I'm not ruling out that what they're doing is that the street, the algos, what they're doing is they're trying to take out stops on equities. That takes the amateur guy out. He's sitting there. He's got a stop loss in. He thinks he's doing good risk management. And all the algos are doing, they know where your orders are. That's why I don't use stop loss orders. They know where my order is. Eventually, markets are cyclical. It's going to get taken out. Doesn't mean it's going to close down below that mark. It's going to get taken out. So they're probing. They're taking out those stops. And on a bullish report tomorrow, if one happens, all you're going to do is, if we get a bullish, when I say bullish, I mean a weak report tomorrow. So don't get me wrong. Don't do a replay of this saying, you said a bullish report. That meant that stocks should have gone down or up. What do I mean? A bullish report for equities is jobs report that is weak. It misses expectations, taking the pressure off the Fed to raise rates. So if we get that, you could see a lot of money rotate into technology stocks as earnings come up. So that is what I have been believing might be the case. Was my faith tested today? Yes, it was. But I'm still have a little bit of hope that what we're seeing here is a test, and then a potential rip your face off rally on a weak jobs report, not a strong jobs report. Oil, very weak. This has me wanting to short energy yet again. They're tightly correlated, and oil was up today, but still on a weekly time frame, this is a pretty bearish chart. Oil, if it closes outwards trading right now or lower, it's probably going down. This may not even be updated. Sorry, this is end of day. This is as of the 5th. I just refreshed it. It's still as of the 5th. This is not refreshed on the day. Let's bring up USO. Yeah, pretty bearish. But I believe it was up on the day. Yes, 0.75 percentage point. Well, but it faded. I see what happened here. That's why the weekly chart still looks so bad. They must have sold it off at the close. Then they did. Okay, now I understand. Gasoline prices, they're down. This takes pressure off the Fed. Weak oil, weak gasoline prices, natural gas, you don't even want to look at. I mean, wow, the hammering of natural gas today or in recent weeks is just amazing. We are at critical support right now. Let's go to the daily chart here. I think a trade could be put on here on natural gas. I think we're going to rally. Look at the volume. Wow. So we're going to be looking to open up what you call a bull call spread. That's the purchase of a deep in the money call option and the simultaneous sale of a deep out of the money option. It's a defined risk trade. You don't need to use a stop loss when you use that type of trade. Why? You know exactly how much you're going to lose when you open up that trade. You also know exactly how much you're going to make, maybe, but you definitely know how much the max loss is going to be. So it's a good way to trade this. Using Boyle the leveraged ETF, not for the faint of heart. Gold, let's update this. It's not updated. Why is this not updated? Stockcharts.com, you're disappointing me here. So the GLD had closed above resistance yesterday, and it failed to hold it today. I guess it's 175 on the GLD, and it couldn't hold it. That's not 175. Where did we close yesterday? What was resistance? 171 on the GLD is probably around that 1850 mark. It couldn't hold it. Up volume, very light. Let's go to a daily chart. Yeah, and I mentioned this last night. All the mining stocks, gold, they were all trading above the 2 standard deviation and up and into the 3rd standard deviation Bollinger Band. That doesn't end well, folks. So you always want to be very, very careful about buying equities or whatever you're trading if it's extended up and into the Bollinger Bands. So please be careful. There will be better opportunities to buy these shares. All right, let's go to some chart requests, and we'll talk about Microsoft and Tesla. Do they hold or do they fail? All right, first up, Microsoft. Where are we at on a monthly time frame? We're kind of in no man's land. Folks, we're going to be using TrendSpider, 35% discount code below, automated technical analysis. at its finest. Tim, IEP, a buy after a little run. We'll check it out. So on the week, so on the month so far, you know, we shouldn't even be going over monthly charts right now. You don't forget monthly charts. We do have support down at 216. We tested it back in November. We even undercut October lows back then. Then we rallied, but now it looks like we're fading back down there yet again. Weekly chart. I think we're probably heading down here, 219 per share. These are the automated trend lines. Take them off, put them on. That's weekly support. And you can see that we respect that support level most of the time. So 219, where do we close today? Not that far away, about $3 away. Let's bring up an overlay of that weekly trend line. You can see it. I overlaid the weekly support level on a daily chart. It's right here. Let's create an alert. Because remember, I stopped out of a position I put on earlier today. And I want to put it back on. Maybe, depending upon the market, if we get a sell-off. I also want to know if we break through. So we're good to go. That alert is set. So support immediately above that, below. That's pretty good to see. So Microsoft, if you're long of it, you may want to consider selling some covered calls. But this chart here, using raindrop charts, you can see this is a pretty bearish close, implying that in all probability we're going to head lower on Microsoft, Tesla. But again, 119 price target on Microsoft, Tesla. Now, Tesla's holding up fairly well here. I do not need the weekly overlays. We'll clean it up a little bit. Tesla's been showing some pretty good relative strength. It closed off the lows of the session. This is a green candlestick, but that just implies that we closed off of the lows of the session. That's it. We're still down on the day versus yesterday's close. We're into like a wedge formation. This channel here in red is the lower band of the prior Keltner channels, and we have support immediately below. I think that this can get resolved to the upside. We're long of Tesla. I'm not going to look to add any more. We did sell covered calls, which expire tomorrow. There's a very good chance that we may roll those covered calls into next week. I will not be long of Tesla into earnings. We will be looking to scale out of our position and probably look to open up an options trade into earnings. But we will be out of the common shares of Tesla by earnings on the 25th of January. All right, IEP. Oh, Icon Enterprise. I think the last we spoke about this, it was on the move, right? I remember talking about this. It's a good breakout. Really good breakout on a weekly time frame. It looks like it's going higher. For giggles, you may want to see whether or not we get a retrace, sudden alert, and buy on a retest. Excuse me. If we rally, we're going up here. And it appears as though we are up to around $54.50 to $55 a share on Icon Enterprises. So I think it has more room to run here. And on a daily time frame, you could see we broke out yesterday, retest today. This is going up higher. Just keep in mind, we're a little bit close to that third standard deviation Bollinger Band. This is a nice Bollinger Band squeeze here. Very nice. Very nice chart. I like it. Probably going up higher. Cat. Daily chart looks awesome for cat. The weekly chart a bit meh, but it's okay. It's consolidated. And look, it wants to go up. I think this gets resolved to the upside. We broke out here. I think it goes up. Boeing. What a run this stock has had. I wouldn't buy this one here. I would like to see a retest of Boeing back down to 190. That's critical support. At current, we're at the 205 mark, which is pretty solid resistance. And if it does manage to break through 205, your price target on this is 220. So it's a good-looking chart, but I would really like to see a retest of support. 190. This is giving us support down at 177 per share. If we get a market shakeout, it could easily head down to that level. Well, a stock that I like, Boeing, I heard a statistic the other day that by 2027, you're going to have twice as many people traveling by air as you did prior to the pandemic. So who benefits? Boeing, the airlines, but who wants to own an airline? General Electric, because General Electric sells the engines that Boeing doesn't make. So General Electric so far on the month is up. And ever since I started analyzing it, it's been on a tear. A really nice move higher off the lows. So I really like GE here. And I haven't liked GE since 2005. So I think that we're going up higher. Price target $78 a share. And after that, a lot higher. I think that this is a retest of the breakout point from back here in October. So I think this is an opportunity to get in on GE. I don't know what the earnings are, but the options are cheap, and I may just buy the options into earnings. I think that's what I'm going to do. GFI. You're welcome, Tim. Go with the weekly view. This is broken out. It looks like it wants to go up on a weekly time frame. Daily time frame. It's gapped up, holding gains. You can see the VWAP here in blue, providing support. This wants to go up, bullish. Silver Metals Corp. It's come a long, long way. You got a lot of resistance above here. The value of TrendSpider, folks, 35% discount code below. 7-day free trial offer. I give it away free to our silver and gold level members. All right, so weekly chart looks awesome. Absolutely awesome. Love it. As for the timing of your buys, we have a little bit of a problem here. Let's throw up the algorithms. We got resistance immediately above. What I would do here is I would buy on a retest of 328 per share. 328 per share. How close are we? What did we close today? Oh, we closed at 331. Just buy the damn thing. It looks like it's going up higher. I like it, but you do have resistance immediately above. You're welcome, Franklin. Talk to you tomorrow, pal. And that is it tonight for tonight, folks. Everybody have an awesome, awesome evening, a profitable trading day. Thanks for being here. Hit the subscribe button and check out TrendSpider. Again, 7-day free trial. Link below. CON35 is the discount code. And I give it away free to Contrarian Traders members as long as you are silver or gold level member rated. And everybody have an awesome night. Be well. Thanks for being here. Out. Thank you, Tim. Jody, thank you. You have a great night as well. Thanks, Jeff. Good night.